Peace and blessings, everybody. Peace and blessings. Happy to have you for another Sauce Factory Wednesday. Okay, today we're going to be breaking down these charts showing overextension in the market, where you went wrong, where you could have went right, left, right, up, down. We're going to bust it up and show you how you get around. Okay, let's get it. All right, all back. We got ES, courtesy of the good brother Freeman. All right, so let's kind of like go over because I want to go over these higher time frame level breaks, right? A lot of times we get caught up in the market because we are not paying attention to the level breaks. When you see a major level get taken out on a monthly, weekly, daily, those are key signs that reversals, pullbacks, and everything in between can happen. And 9 out of 10, that is actually giving you a setup if you patient enough to take that said setup. A lot of times we kind of get one sided a lot, and that's how we get one sided, right? We get blindsided with that, not paying attention. So currently we're on a weekly chart, but what I want to do is bag out to the monthly chart real quick. This time we're gonna start going over. We're gonna do our top down from there, and then we kind of, rinse and repeat review, right? Because last month already closed, so we're in a new month now. We're in August. Last was July, so we're just gonna mark out those levels. Very key thing, you want to mark out those levels. Month low. All right, month high. As you see, we already took out last month low. Now let's drop down to the weekly chart real quick. Now, what I want to do is mark my weekly levels now. Boop, boop, boop. Uh-oh. That one. Week high, and then want to go week low. All right. So what this showing us is price after this took out last month low. 2 weeks ago, it had a nice little rundown. Took out last month low. That was the end of July, and it was taking it out. Boom, start of August, it went down. Now, if you look at it, if we got one more day in this week, if price close, we're gonna have a morning star pattern, which suggests a bullish uptrend, or at least we can get 2 to 3 more candles of up movement, which will insinuate that, hey, we're going to continue to the upside, right? So that's why we back out to the weekly time frame. And once you kind of get your chart mapped out, we're going to do this real quick to kind of show you that, hey, the level been hit and make where it's still seeable, right? That they already took this level out. So what I do is I kind of come back, dash it up like this. Oh, yeah, they broke through the level. Week gonna close and break out, right? Because I want to see them break out the last week high or low to give me progress levels. Just let me know, hey, the week is moving, is going in this said direction, and that's how I keep track of things by watching it, right? Now, since we are to the upside, we put in a morning star pattern, but the pattern is not finished. We got one more day of trading, right? Technically, tomorrow's Thursday. If you know anything about the Asian market, technically the day starts at 6 p.m. when the market opens back up. That's 6 p.m. Central, right? But when the market opens back up, that's why they count it like this. So I say a day in 22 hours. But we got 2 days left in this week. I want to see what happens when this market closes. But as you see, we made a nice retracement. Boom, down into the zone here. Now we're coming back up to probably retest some levels or may take out the monthly high. But we don't know that yet, right? So what I want to do now is drop down to my 1 hour chart. All right. We're going to span it out, and then we're going to start marking our levels up of the day so we can see what actually happened. But prior to that, I want you to do this one thing. You want to go back to last week on Friday. You get to the market and you want to mark your Friday close, right? That should be this candle here. So we close at high. So template. Where are you? Friday. All right. And then I'm just going to change that from a low to a close. So understanding about the Friday close is price when it opens up on Sunday, price revolve around the close level. the Friday close level, right? So you'll see it's going down, making a new, probably putting in a new low for the week, and then coming back up and doing all of that. Or it could be, you know, bouncing around in that ballpark. Because typically on Sunday, it'll probably take out the weekly low if it's close to it. If not, it'll probably just, find them making a range going up and down until it start breaking out of that range on Monday. So day one, Monday, what I like to do is grab me a horizontal ray line. I like to mark the high and low of Monday. First, I want to find my lowest point. Wait. Uh-uh. I'm way over here. But I'm all off. Okay. So we're gonna go ahead and drop this little trend line. Find my Monday. There we go. All right, that's Monday. This our Monday low. Yes. Do. Okay. Do. Where are you? Monday low. And let me move this trend line because that was in the wrong spot. All right, we need to cut all that price out. Let's span. And where are you? Friday. Oh, that's a lot of consolidation. Wow. Do do. Mm-hmm. Yes, sir. So that's Friday close. So as you see, Sunday market, right? See how prices kind of stayed around that level, played around, and then it consolidated, started to break out, right? So this is your Friday level from this point. So your Friday close, you want to mark that, had it highlighted, close of the candle. All right, now we just finding our Monday level. So this is our Monday high. So what you want to do is mark that. Okay. So you see that started Tuesday, London market. So when I say Monday high, where are you? Monday high. Now, as you see, price went up, went down, stayed in this channel. Tuesday, London market, price did what? Break out. So what you want to do is simply mark that. This thing tripping. Let me get over my mouse. All right. So what you like to do coming to the market, mark your London high. Then you say, all right, what's my range here? So then I'm gonna say, all right, cool. What's the London low? Technically, this starting to your New York, right? So you want to come back here and say, all right, cool. Where's midnight at? This midnight, that's your London low. You can mark these or not, totally up to you. But you want to just identify those levels. London high. Price came out during the Asian session, took the high, came back down into this range here, right? When the New York opened, it's coming to start in New York now, 7 o'clock. That's your window. So you see how they took out the low of that London start, right? Boom, came up and went. From there, I can safely say, hey, that's my low for Tuesday. No problem. And if you're shooting upwards or you taking the upside move, then you know, like, all right, cool, they're gonna break past that and then want to keep rocketing. You got a lot of price action in the past. That's the great thing about having price action already there because you got so many targets that you can pick and choose from. But let's say if you don't, you can always use a fib extension, right? So you can say, well, I want to go from this low here to here. Now you got targets all the way up for the day. So you can automatically shoot for the 161, all right, 0.80% retrace extension level. You can always shoot for that. And you know for sure this is last month low. So they're gonna want to retrace back into this range and rebalance price. So let's do a quick look to the left and you'll see what I mean. So you looking at it, look at all this confluence, right? So let's kind of zoom in. So this is what I mean when you get the chance to look at the ranges. All I want to do is just kind of do a quick inspection to see what's going on here. What we have left, we got a small little gap here. All right, cool. That's great. Then we got a big old fair value gap here. That's great. Targets, right? We got targets. Then I have a nice volume imbalance right here. Small gap, but definitely a nice little volume imbalance. So I wanted to highlight these different things on the chart. And then when I slide back over this way, well, guess what? I have targets now, right? So that'll make sense when price can get up there and why they gonna want to go up there, especially with news events. We had PMI, CPI, all that good stuff this week. A lot of major news and how they're gonna typically affect the market. So that's how you use that, right? But this is gonna keep marking out the range. Let's get these out of there. Oh, let's get that going. So as Tuesday progressed, we just gonna keep tracking it. We're gonna say, all right, cool, that's how low, but where is our high at, right? So we're gonna find the highest point of Tuesday. All right, cool, which is here. Boom. Then from there, I'm just gonna go on here and mark that. All right, Tuesday high. So from Monday to Tuesday, we had a range expansion to the upside. That was a bullish move. Okay, great. Now let's look at what happened on Wednesday. Okay, this is your 8 o'clock. You put in one high here at the start of New York, and then we had this low. Clearly, price is going up, but we got to see like how they're gonna do it. Now, this low happened at 10 o'clock. The market currently closed. So we just watching things happen, right? It consolidated all the way through Asian market. London didn't want to do nothing because they knew news coming out. So that's going to be a little janky. But let's check the oscillators real quick. So you looked at the top of the day. When you seen your MACD looking real skinny like this, that's telling you that's consolidation, low momentum. The market wasn't sure. Nobody was sure what they was going to do. So the best thing to do is wait. Don't do nothing, sit on your hands and just stay still because what's happening, right? You had a crossover here on your MACD on the 1 hour. That's very significant, right? So they crossed over to the downside. So now you're about to go on retracement, but look at price. Price is steady going sideways as a hidden bearish divergence. It just really didn't want to go nowhere, right? So we got to ask ourselves, is this worth trading? And at 8 o'clock, you got to really start evaluating this. News coming out, market not going nowhere. I need to pay attention to my mindset to say, do I want to trade or do I just want to sit on my hands, wait for a better setup another day, whatever may be the case. But definitely, do I want to enter this chop? Because that's all it was. Now we can drop down. I know for y'all's sake, we'll drop down to a 15-minute chart. I know y'all love these things. Doo-doo-doo. So here, looking at it, right? Boom, this the London levels. We was looking this Asian, this our London market, right? This little channel that we was in. Price did this little crazy wick, taking highs and lows, which is buy side, sell side liquidity. It took them both out. You got all this crazy price action happen at 9:30 open. It forced price down. Where did they go? They went here. Simply put a horizontal line and ask why did they go there, right? Oh, look, we got a volume balance. They've been here before. They wanted this level, right? They wanted something in this price on the lower time frame. I'm sure it's something here. So you just want to highlight that and say, okay, cool. What's in this? What's in this wick? Quick way of doing that. I want to drop down to go to a 5-minute chart. Got our rejection block. Great. Let's keep sliding and see what was here in the first place. Well, that's a strong wick. Why did they do that? Right. So you want to kind of get in here and see, like, okay, it's something here that they really like. I don't know what, but we're going to go down until we find it. Well, we're going to have to keep going back and forth. I want to focus on these two candles here. All right. So let's go down to a 3-minute chart, see if we see something. Got a little volume imbalance right there. I want to highlight this just to keep track of it. Make another little box. And I'm going to go down to the 1 minute now. I want to see what's in this candle. Boom. Got another rejection block here. So I don't care about that one no more because I know all the action took place here. Yes, sir. All the action took place here. So we're going to just stay focused on this area. That's all you do. You just kind of like drop down, find the zones where price took the most action. I'm not going to highlight this whole candle because price turned here. So I want to just, keep this zone in mind, right? So now when I take this crap off, Going down. Back. Go 5 minutes. Boom. All right, price way to hiccup there. Let's get back down here. Let's see what happened. Now that makes more sense, right? So you see they tapped into the first rejection block of the volume imbalance, right? Over here in this wick. That's all they wanted was that one. So that incomplete wick, they tapped back down and then you would have had your limit order set or understood that that was there and you was waiting for price to come down in that, you could have took that whole ride up today, friend. So technically the best setup was at 10:30 when it came down in this zone because once they put this candle in, that was no look back. That was a 180. They just took off. Now, I always speak about these. You got a 3 candlestick order block continuation. You know, they took off from there. That's another little goal to say, hey, they're going to continue here. Just rock it off because they're going to want to do a range expansion or they're going to do a pump and dump or a dump and pump, right? So we're going to mark this as our Wednesday high. You just want to keep track of these moments. So you just, any major levels you see where price turned at or you have on the board, you want to mark those down. That way you can keep track and say, okay, cool, price went there before, they're going to come back. And like you have it here at the 8:30 high, most people had this marked out because that's buy side liquidity, right? So when you see price dipping down and start running up, 9 out of 10 are gonna go for the high. So you see, boom, it will took that trade there. That's 79 ticks just by simply having limit order set. You see the reversal. You see them pushing. You say, all right, I got a limit order set right here. I could have took 79 ticks. Smooth. You could have done a fib extension, fib retracement, however you wanted to get down with it. So let's say pop, pop, pop. From high to the low, because it, also have extensions on the other side. So I got the 1618. But so this the 120 extension, right? You see how to hit that? Yeah. Let me show y'all. Just in case y'all don't have those numbers, I'll show y'all real quick. So later on, y'all can pause the video if you want, get the numbers. So these are the fibs that I use. On both sides, I have extension numbers, right? So the 127 fib extension. So if they come past this level, right, I got extension levels on both sides. I got the 161.8, got the 127. Then I have my negative fibs. So if it would have came back, let's say they would have came anywhere in here to 618 level and say, okay, cool, we're gonna hit this and go down. Great. But reason why we knew they wasn't gonna go down, simple. We're gonna play a simple game here, right? Okay, cool. MACD did what? That. But what we looking at is where we at on the 1 hour. At this time frame, we're in a bullish market, right? We're on the bull side of the market. Even though it's crossed down, remember, we still in a bull market. Go to the 4 hour. Where are we at? We in a bull market. So in our RSI is what? High demand on both of them, the 4 hour and the 1 hour. When you have that level of confluence, that's why you use your oscillators for, right? Any oscillator you have, you look at your higher time frame, look what side of the market is. All of them have a neutral level. Like the RSI got the 50. Well, the MACD got the 0. When it's above it, it's bullish on both sides. That's just simple. Whatever indicator you want to put on any oscillator anyway, they're going to tell you what side of the market. Stoke, the whole nine. They're going to say, hey, we up here. Well, guess what? That's high demand. That's bullish territory. 9 out of 10. If you wait for a pullback and it start going in that direction, they're going to continue bullish. Now, it's a moving average I like to use is the 34 simple moving average. As you see, hey, we're above that. Guess what? We bullish. We clearly know we're above the 200. So trading with the trend is major key here, right? And you already know they're trying to do a range expansion because they already took Tuesday high. They came back down and they refused to drop. They should have tumbled. Since they didn't want to come rebalance all this price down here, we got to assume that, hey, these guys are pretty bullish. We are not messing around. Let's go down to a 12-minute because that's one of my favorite charts anyway. And if you look, as soon as you got that crossover, boom, just by watching a 12, 15-minute chart, as soon as you got a crossover and everything heading up, your RSI in bullish territory, by this candle here, you could have waited, got to close above the 34 or any other moving average you like to use, 21, whichever case. So I'll show you. right? The 21, this would have got you in there a little bit faster. You could have these fib numbers, by the way. Anybody want to ask? See, boom, 21 right there. Let's say, oh, well, I don't use a 21. I use a 15. Okay, great. Boom. But it not much of a difference. You feel me? So whatever moving average you want to use, or you want to use EMAs. I got those too, right? Let's cut this off. Oh wait, I got some cut off on this. So I use a 513, 200, above a 200 is your 513. You got the crossover right here. Bada boom, bada bing. All things line up. Go with the flow, right? It's above the 5. You want to just get rid of the 13 and it's at 205. A simple moving average with confluence with direction. You could have easily took this trade the moment it got above here. You had full on confluence. We got the crossover joint. We lit. Boom. Let's go. Right? That's it. You just got to be patient, sit on your hands. Trading in between this because right now we know if it's drawing down, it's going to find a level. Where we don't know yet, right? We got to figure that out. So let's get this gap out the way because they already took that. So we already know they broke through that fair value gap. They're not showing no respect whatsoever. Now, where had they been? Target the wicks. You see these large wicks on these higher time frames, that's price action and it done something. So what you want to do is go back, take your time, mark that stuff up, and wait. Price gonna go there. Price definitely gonna go there. And then look at it like this too, right? This one I mean on a 12-minute chart. Look where price did. It took out this low. And before that, it took out this low. Right? So you got to break a structure on multiple occasions, but this time it finally say no, Miles, we going. All right. This is what happened when it takes these levels. We know they're gonna want to retrace, right? The moment they broke down, cool. What happened? Price come up, right? So let's get these moving averages out the way. This is what I mean about the break of structure. Price did this, boom, broke down, boom, retrace, went sideways, dumped again because we took this level, right? Boom. But this time they went to the moon because all they was doing was taking out sell side liquidity. They knew people had stops here, in here, because the moment it went up, somebody went long. I guarantee you, the moment they took that, they said, oh, yeah, look at all that. They're going to trade somewhere in here. It's probably like an order block, da, 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 da. They said something, whatever technicals they was using. They assumed that, hey, this was the reversal because they seen price rocketing up from after it took this low. They seen price going up on a trip. FOMO kicks in. Remember, this news that's dropped. You got traders who specifically just trade news. So the moment they see a candle like this going off, they are not going to miss their opportunity. Where they stop at the low. If you wait, let price do what the heck you want to do. 19, you're going to catch that trade to low. Now, we know everybody like to trade these microscopic time frames, so we're going to pull back, right? Then we're going to drop down to a 1-minute chart because I know what chart they was on, right? We all been there. Boom. All right, cool. Price shot down. We'll wick some people in, fake out. So the other traders who know how to trade the news, they wait. They don't ever jump in on a candle. They just wait. Cool. They wrote this down. Well, guess what? You got to close your position. All right, cool. Close the position. Price consolidating. Someone say, hey, it ain't dropping no more. Where they gonna go? Go up. So they wrote it up. Let's see. From the low, let's say they take this high right here, right? Where did it go? 52 tick move. Somebody will jump in because they know, hey, the market bullish. I can probably catch 100 ticks, whatever. I'm fully leveraged. Most people go in 5+ contracts on some nut stuff and try to reclaim that because they know this is an imbalanced price. Price gonna trade back in this. I want some of it. They don't care. They'll go all in, take that trade. We know this every day because we know the traders personally, don't we? We ain't gonna call no names. We know the people. They'll jump for that. They'll take that bait any day out the week. So just keep that in mind. Stay woke. All right, let's go back out to a higher time frame first. Because I don't want to be, well, those candles. Boop, boop. So at the price, trick some people off the streets real quick. That's when they go with they move. Goddamn right, Rod. To the up, 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 up. I ain't gonna say it though. You ain't gonna. You almost got me. You almost got me. Yeah. So once they took liquidity, they had a target. They shot for the target. It hit. Boom. Slap. We out the door. Right. And they got back with it. You could have scalped this down because it was a pretty decent trade. After you see a form of consolidation, right? You see that going that you're, reversal trader or you just like to trade. You already see price consolidate and you say, well, if they break this low, I'm going to go in. Knowing it's a block down there. Well, that's 90 ticks. It you would have got in right there at the break of that candle. You feel me? You can set a limit order and say, I'm going to risk 26 ticks. Or I'm going to risk this. I'm going to risk 20 ticks. Who won't shoot 20 ticks on ES? That ain't going bad. For 90 ticks, that's a great payday, right? Hopefully you ain't greedy. You'll go for the 80 piece because you don't want to be down at a block. Don't try to get the whole block. Always get out ahead of time because when price reverse, it reverse people. This FY. When you get down there, you want to be out here. Be a pig, not a hog. Hogs get slaughtered. Pigs just get fat. Okay? Being a pig is fine. You get fat. Being a hog, you get slaughtered. All right. So you don't do that. Don't do that. Okay. So, but I won't. You could have smoked that. Easy peasy, right? Get that off. So once it took that level, guess what? You should be expecting a form of retracement. When, where, somehow, somewhere. Okay. Sure enough, you got to ask yourself, well, technically, I was bullish the whole entire time. That's the pullback. I got my moving average. They broke that. Okay, cool. We may be going somewhere. Especially with a strong candle like this on a higher time frame. Come on now. Talk to me. Talk to me. This thing was strong. It was strong, Cletus. So, yeah. Any questions so far? Yay, name, maybe say. All right, cool. We on it. So once they target that high, you could have easily took the one trade here, or you could have just simply say, hey, I'm looking, I got price action up there. I'm just gonna let it run and get it high live. Good deal. Always the easy target is liquidity. You know for sure they're gonna want to sweep that. And sure enough, what they do, they sweep it, wrong price back into this range. We know good and well later on the lower time frames, it's an order block, so that's cool. It is what it is. But we see this is our high for the day. 12 o'clock New York, that's our high. We trying to see what the London market going to do. Are they going to consolidate this? Because looking at the oscillator, they trying to retrace some more. Are they going to consolidate it? Or are they going to go ahead and reverse it and keep going? For the understanding on like what could happen, let's back out to a 4-hour time frame and let's run some fibs real quick, right? Do. Okay. So we look at it, price is pulling back. Let's get the moving average off. Let's get these little lines out of here. Let's clean the chart up real quick. Where you at? Vertical line. Vertical line. All right, cool. So let's get that cleaned up. Got it done. I want to go from this pivot here to the low because price was going down. So I want to follow the overall trend, right? That's simple. Now, currently, we at a what? We are above the 65. We had about a 70% retracement. We in this little zone here, right? It's a breaker. Ooh. Well, it's a block. They went out of here before, and now they broke down. Now they back in here, right? So this is one of these little mixed use units. Looking at it, price barely peaked into this fair value gap. There's a 4-hour fair value gap, so there's a lot of imbalanced price there. Do they want to get the rest of that at 78% retracement, 88% retracement? Maybe yes, maybe no. But we currently want to break down and go back down, rebalance some price. Possibly we can go return to highs. We still got a lot of earnings left on the table. We had a mix up with Chipotle and Starbucks. Starbucks snatched up Chipotle CEO, causing the inverse. Chipotle went down, Starbucks went up to the moon. dude said he do pretty good work. I'm gonna start tracking that CEO because he making some stuff happen. Apparently, other investors who would familiar with his work and his efforts to turn around Chipotle could be something to that. Mm, okay, bet. Who gave him the raise though, Tony? Was it Goldman Sachs, J.P. Morgan? Who gave him that evaluation? You know, the boys they be giving everybody raises. They probably doing that last ditch to save themselves some money. It'd be funny. They lose their CEO, then they get a price raise. I don't know. Maybe I'm just conspiracy theories. I don't know. Maybe. You say maybe yes, maybe no. I'm put a line here. They want to get rid of this field. Okay, template. That was 78. Okay, let's get this field up out of here. Boom. So this our weekly level, right? So that's what we currently competing with is that 78% fib to the upside. Now let's say price side to come down some, right? I want to go from this pivot low to the current pivot high because it's a high right now. Taco Bell to see it. Oh, that boy jumping around like that. Now tell me he was that guy who said combine the Taco Bells together. That was trash. All right, cool. So we're looking at a nice retracement, right? If they decide to start retracing, this is our 23% fib down here. Hey, let's see what's happening, right? If they come back down to 38 down there, 50%, 61%, we got a lot of unbalanced price action that they can kind of pick from. All right. Man, listen, Rod, they lost their CEO. People say, the heck with it, we out. Hmm. Oh, that boy smart. Okay. Yeah, that boy smart. All right, cool. We're gonna see that's why you gotta track the CEOs. They do make a difference, okay? One person can make a difference, the ones at the top. They will make a difference. Especially a good quality CEO. Know what he doing, turn around businesses. Yeah, they're gonna pay that boy. Oh man, listen, they had a stock split 50-1. So for one share, it turned to 50 shares. He missed that stock split. Was talking about that a while back. Man, Rod, you must have been asleep. Mm-mm-mm. So let's say price action breakdown. They say they get back down in this range for the Tuesday high, right? They break back below that. So we're looking at 188 ticks to the 28% retracement, 367 to the 38, and then you got a 50%. That's 500 ticks down. That's $128 on the ES. That's a major move. They're gonna take a while, right? The ES don't move as fast as the NQ. But you gotta pay attention to what the market is doing, what it's setting up. Like, is momentum leaving out? When you start noticing momentum is leaving out, they could be fully extended. We looked at the oscillators. The oscillators are high in the demand side of the market. Looking at this 4-hour chart, the RSI is up there and it's trying to come down a little bit. The MACD is losing momentum to the upside. So this is a nice little diversion setting up. Got low momentum. Well, rising price. At this moment, now it's starting to match, right? So could we see some downside for the rest of the week? We had 3 days of push. Now we have 2 days of fall to kind of bring us back into a range. Will we close outside the weekly high or will they bring us back in this range and we close a little bit lower than that and continue this downtrend? Like, we got to pay attention to these things. You got to trade responsibly, right? And keep your eye on setups like this. So on a higher time frames, always go to your higher time frames first. Look at your oscillators, see if they're in agreement with you. If they're not in agreement, kind of sit back, stay on your hands. You got a lot of news, especially with the ESNQ. When major red folders and orange folders drop, it's best to wait and let them play themselves out, do whatever they need to do, and then enter the market for your setups. Cause not worth it getting into any of that trouble with them, getting into a shootout with the rest of those traders, those hedge fund traders, retail traders. There's no need to get into that mix with them. It's better to go over to another market. Crude oil actually moved pretty smooth today, right? That's what I was at. You know, it's my neck of the woods. Let's go over there. Let's go over there. Boom, boom. So last night, we'll go on ahead and do a quick little markup of this. We don't have to go that slow this time. We're going ahead and do it pretty fast. All right, we go back to the weekly. Boom. Weekly high, weekly low. Okay. Then want to go down to a 1 hour chart. So you look at it, last week price was starting to push up reverse because they took out last week low and also a monthly low at the same time too, right? So they starting to push back up into this range. I was sure, but for time's sake, we're gonna just push on. Okay, where are we? We are over here. Yeah. The goal, let's find it Monday. Mm-hmm. Oh, that Monday low. It's kind of like in the range of the little candlestick. It took that Monday low. All right, then we're gonna find Monday high real quick. Oh, there we go. That was one heck of a move. If y'all was on the trading floor Sunday night, I definitely was in it, messing around with it. It was a heck of a move. I woke up, I was like, man, this 8 tick stop loss gonna hold. I know it is. I said, on mothers, it's gonna hold. You feel me? I was like, I ain't standing on business. So Tuesday, I already knew. I was like, hey, oil don't move like this. They had to reclaim some price real quick. Like, yeah. Using that. I already know, Shantae. I already know you was in that thing. In that thing. Yeah. So this is what I wanted to see, right? It took out a low here. This significant level. This should have been market structure. This should have been this was your higher low, and it failed to make a new higher high. Set up a nice little double top pattern, right? So you watch these patterns. It's on a 1 hour too, so that's major. Boom. Oop. Okay. Then from there, this was the retracement. This is what I was waiting on here. But I wasn't up for the London to catch this because this was going to be the move. It was an order block down here that I highlighted last night that they kind of, bounced out of in right here. There you go. A little janky. So it was a big one. So it was last night. We was on karaoke Tuesdays. Y'all already know. We was lit. So they bounced here before, came back, right? So I'm watching it. That's all I'm doing. Then from there, I'm looking at my confluence. 1 hour chart went into the bear side market. Okay, cool. Now guess what? Now I'm also looking at it on the 4 hour chart. The 4 hour chart went bearish. After all of that, Tuesday was a red day, right? So I'm like, bet 4 hour, 1 hour in agreement to the downside. So I know for sure my trade gonna be bearish when I wake up. I'm looking for a bear setup. No huss, no fuss, right? Great deal. So where is my Tuesday low? This Wednesday. Great. This is my Tuesday low. Ooh, ooh. Get that out of there. Now I'm looking for the highs, right? Market it. Well, 3 this London, remember that. Price already broke out of consolidation. All right. This was a consolidated range. Price broke out. It's no need. We already know what time it is. Like this. Now, when you have moments when price hit like levels like this and they break out, they get up there and consolidate and break out, you can definitely you want to highlight these boxes. I was very upset one time I missed a 1 to 10 setup because I forgot to stand this box out. I seen a consolidation, I seen price break out in London. I said, okay, great. I kept it pushing. I was looking at something else, but I forgot to drag this box over because later that day, price shot up there. And since the box wasn't there to let me know what was to the left of the chart, I missed the setup. So, of course, I'm going to go back and highlight this later on my other chart. But yeah, you definitely want to extend these things out and let them like, all right, cool. Consolidation breakout, price will return. Guaranteed. I guarantee you, price will return. All right. So from there, I trade on the 12 minute. You already know. Now, the best said setup was we're gonna go from all right, let me leave that right there. So remember price went here. So you gotta mark that London low. That's what I did today. I say, oh man, that's my little London low going to New York. All right, where my little fib at? Fib nasty. There you go. Boom. So you know exactly why I stopped here. This my pivot point. This my high. This my low. Oh, I flipped it. Get out of here, buddy. Uh, boom. Boom. My entry was the 618. I waited. I already knew I had higher time frame confluence to the downside, right? I said, okay, great. Why am I going to enter at the 618? Because they put this nice fair value gap right there. Nice little pretty fair value gap they had for me. All the consolidation, they had a nice little fair value gap exiting the consolidation, right? I said fair value gap at the 618. Why not enter the 618, right? Hindsight now, I could have set my limit order at the 65%, would have gave me a better stop. But lately, price been falling short. I was like, well, I'm gonna go here and I'm gonna target the London low, which was 75 ticks, because I know they're gonna break past that. And I risked 15 ticks for this trade. I almost got stopped out. I ain't gonna lie to you. You see that? So this is what I was clutching my pearls right here, like you say, Shantae. See what I mean? This is what they almost got me at. Right there. You see that one tick? Y'all don't know how bad it was. I'm talking about, see that? I was like, man, just go ahead, leave me alone. I was in that thing begging these people, these folks to walk away from my dog. I'm like, man, come on, dog. Just let me be. I'm just trying to, eat a little bit. I'm just trying to make some money. Y'all leave me alone. I don't do nothing to nobody. I give to charity. I do a lot of free work here. I'm a good citizen. I pay my taxes, you know, all that good stuff. And y'all gonna stop me out. I'm like, leave me alone. Go take money from somebody else. I'm like, don't bother me. I was legit. I was blowing the candles on the phone. I was like, get away. Shh, shh. Go on, get now. I was like, get, goddamn it. I was like, get. 9 o'clock hit. Why? When I seen this candle came in, I was like, thank Jesus. Get up out of here. Let's go. Let's ride. I was one tick from getting stopped out on everything. I was nervous in the song guy. I just had to put the phone down. So I can't look at it no more. I was just like, woo. I was like, man, don't do me like that now. But as you see, patience pays. So here was pretty much a smooth setup. Price is dump. Once it got up there, consolidated, boom, price dump. Now, the great thing about it is news do not affect commodities like they do indices. Heck yeah. News do not affect commodities like they do indices. Keep that in mind. All do not move off the CPI, PPI data. Yes, it get a little spike in volume, but nobody really trading it. They go into the ES, the NQ, the Dow Jones, the Russell, all those other places, and blowing them boys out the spot, right? They ain't over here. They ain't over here like that. Gold may do a little craziness, but crude oil is not gonna trip out like that. So you can safely say, okay, cool, I'm got a limit order here. Boom. And I was comfortable because also, hey, guess what? Remember I told you about those 3 candlestick order blocks is right there. I was like, man, if they're gonna go, they're gonna get right there. What I say? Come on, look at it, look at it, look at that bag. Let me put that little sell box. Let's get rid of this box so y'all know what time it is. Now, this reason why it's also important when you're looking at your fair value gaps, you want an order block next to them, right? So you see how that order block is right there. So I'm like, okay, I should be smooth. The intelligent thing to do was add about 10 more ticks. I would have been butter. I would have been butter. I ain't gonna lie to you. If I would have added about 10 more ticks, 5 to 10 more ticks, I would have been butter. I would have been like, yeah, whatever. But I don't like a drawdown like that. So 15 is like, okay, we smooth on a reversal. It is what it is. I was hoping they was turn on a dime right here and it's gone ahead dump. But they almost wiped my nose real quick. But it is what it is. So from there, price got up out of there. One quick retracement, last look back retracement, and it's gone. There's $1. Boom. So we want setups like this. You want your higher time frames in confluence. You want smooth charts going from point A to point B. When it rejects, you want a little consolidation. That's fine. It's actually a good thing too. If it rejects too hard, 9-10, they're gonna bounce it and bring it right back. May go past that level, but a nice little consolidation in a dump. No look back, no games, no fugazi. Whoops, nothing. It just gone. Dump, gone. We out it up. Boom. Bye bye. Those are great setups. This actually did at 1 to 10 right here. So you look at it. Let's put a short position back on. Boom. From there, if you target a negative 27, that's why I tell you about that negative 27. That's $1.07. And, my risk was here. But you see, it still kept going for that Monday level. So you would have been like, you had time to hold on that long and wait. You could have targeted the Monday level, which is the negative 61. And you could have got you 140 something ticks, 148 ticks out of that trade. And it was a smooth selling, unlike the other MCs was very choppy with the news. The Japanese yen, they went besides themselves by actually raising the interest rates and doing something for the economy. They kind of messed up the market for us per se. So just kind of be on the lookout for that. It's not performing how it used to perform. So you might want to scale down your profit taking because the volatility is not there like it used to be. So you want to scale down on your profit taking, like your targets anyway. Use better risk management or use different profit taking tools like break the position up in halves or quarters and scale out of it. That way you can lock in something, limit your risk, and don't overtrade. All right, and that's my spill for today. Okay, no more, no less. Let's stop on here. Hit that.